Hello and welcome to this November 30th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Millicom International Cellular, ticker symbol MICC. This is a technology company with a market cap just a little under $10 billion. Taking a look at the chart, there's actually some bullish features and some bearish features as well. So it really depends on whether or not you want to paint this glass half full or half empty. But taking a look at it from the bullish standpoint, you can see that we came down, tested the 200-day moving average, also tested an area of key price support on the way up. You can see we struggled at about $88 on a couple of occasions, and then increased volume in late July or so as we took out that $88 resistance level. We came back down in August. We tested it successfully and the 50-day moving average all at the same time, and then continued pushing to the upside. Now, after about the last 10 weeks or so of selling, you can see that MICC has made its way all the way back down to this $88 level, actually on Monday, hitting $87.63 intraday. But notice coming back up and finishing near the high of the day, so pretty nice finish on the day. The other thing I think looks interesting is even though we have now finished on Monday below any of the closes over the last almost 2 weeks, notice the last 8 trading days we have closed at or above our open on the stock. So even though the stock has managed to move lower over these 8 days, we have yet to see one single day where we've closed beneath the open. So I think MICC may be running out of sellers here. So in the short term, I think this reversal off of about $88 price support looks pretty bullish in the near term. Notice the volume on Monday as well on that reversing candlestick. The other positive feature here is you can see that the MACD is actually slightly higher as we put in the lower lows. So we've got a long-term positive divergence in play, and this ordinarily would send the stock up to test its 50-day moving average. That's the bullish side of this equation. Now let's talk about the possible bearish implications here. Off of this move to the upside, there appears to be a classic head and shoulder pattern forming. Now we don't know that it's a confirmed head and shoulder pattern until we print a right shoulder and then come down and break down beneath the neckline support. But if you follow along here, you'll see that on this move up, we printed a left shoulder in early August. We came down, put in this reaction low back down at 88 to test support, was actually the left side of the neckline. We rose, we put in a higher high, that becomes the head. We came all the way back down, and potentially on Monday, by going back down to $88, we have put in the right side of the neckline. Now, even in this potentially bearish situation or development, it's quite possible that we will see some short-term bullishness, because if in fact this is the right side of the neckline, then we would expect a right shoulder to form. A classic right shoulder tends to form on the 50-day moving average. With the positive divergence in play, that also suggests a possible 50-day test. So the next move up, even if we do rise about another $5 or so to go test the 50-day moving average, won't really resolve the issue about whether this is a longer-term bullish pattern or a bearish pattern. What we would focus on is if in fact we get this move back to $95, I think volume will tell the tale. Either we have increasing volume, which would suggest that there's some accumulation going on and that this is not likely to be a right shoulder but rather a break through the 50-day moving average, or the move up is on less volume. And considering that many of these heavier volume days during this downtrend to print the right side of the neckline is on heavier volume, a light volume move back up to the 50-day moving average would be bearish. And this bearish pattern would then be confirmed by a subsequent move back beneath the neckline on heavy volume. But we're getting a little ahead of ourselves. Let's see how it sets up in the days ahead. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.